In today's video, we're going to discuss 5 reasons why using margin with Yieldmax funds, or any other funds for that matter, isn't as risky as you think. So we earn over $100,000 per year in dividends at this channel, and my performance and value shows that I'm up 43% for the year. 43%. The S&P is up 16, the Dow is up 4, and the Nasdaq's up 31%. So we're beating all of the indexes on a year-to-date basis, and on a daily basis, we're at 0.69% today, which, as you can see above, beat the S&P. So we're right between the Nasdaq and the S&P, and that's exactly how we want it. We're also living financially free here out of our brokerage accounts, getting both dividends and capital gains. The $100,000 that you see in dividends that I earn per year, plus this performance that you're seeing with capital gains, is very unusual, and you want to get both in order to get financial freedom in your brokerage account. If you're interested in doing the same, email me for my e-guides at aikentodd48@gmail.com. When you buy my e-guides, you get free access to my phone number and the Discord chat room for life. Okay, so when you email me for my e-guides and you ask the question, hey, if I buy your bundle, does Discord access come free for life, or is it per month? It's for life. Okay, so first reason I want to say for why margin isn't as risky as you think when using Yieldmax funds is because, first of all, the dividends pay the debt down, okay, and the interest, okay? So if your interest in margin debt is 10% or even 20%, most of these Yieldmax funds cover that interest, okay? So when you're trading on margin with just stocks, yes, that's a problem, okay? Go look at the Kevin O'Leary video that you saw, maybe a short there. I've seen that go viral, where he says, don't use margin with stocks. You know, that's the dumbest idea ever. But he's talking about stocks, not dividend plays. So as you know, I use indexes at this channel. Not only do I tie most of my investments to the indexes, but when you're buying Yieldmax funds, they are the index, okay? So plus, they're not just buying the stocks. You're not just buying Facebook or Meta. Obviously, you're buying a dividend play that's going to cash flow regardless. So if you have a dividend of, let's say, 50% in Tesla, all right, which is one of my top holdings here, Tesla, 10,000 we have here, okay, a 50% dividend means in 2 years, you're paid back in full. So no matter what the stock price does, you're going to cash flow that investment. And so your margin will just be gone and you'll be left with the asset to yourself. My dividends of over $100,000 per year, as you know, as you saw at the beginning of this video, will pay this margin debt down in less than 2 years, okay? Because I earn about 140 after all the dividends are registered. So 140 for 2 years, that's 280. My margin debt will be gone. I'll be plus 30 grand. Okay, so I don't understand the argument of why people think my account's going to blow up. You know, I'm using margin. You see those comments that I get in the previous videos. Man, this guy's account's going to blow up. Imagine if you had a 50% correction in the market. First of all, markets don't really correct 50%. Even in 2022, the market's only pulled back about 30%. It's stocks that fall 50% or more, okay? So indexes don't really fall that much. But if we do have a black swan event like in '08 or like in Corona, well, then guess what? I'm scrolling fast because I'm on my cell phone, okay? I'm not doing it on my computer. Look, I have my put options here. I always keep put options on here. I keep these hedges here, okay, just in case we have this black swan event. So please, for all you detractors of margin here at my channel, please leave comments that are constructive and that can make a case against what I'm doing here. Don't just say I'm going to blow up, because how, when I have put options here that will make more money in a down market, in a 30% down market or 50% down market in 1 month options. Okay, they'll make me a fortune. All right, now my dividends in a down market, okay, let's say we had a 50% down year, okay? Well, the 20% dividend from Cornerstone, and beware, I'm about to talk about Cornerstone, okay? So the Yieldmax dividends, they fluctuate, as we've talked about in past videos. So if the market's falling, the dividends will be reduced in the Yieldmax funds, but they're still going to pay you a really nice yield, okay? You're still going to cash flow your asset, okay? But with Cornerstone, as you can see, I put $500,000 in Cornerstone because the dividend is set for the year. So if we have, it's a 20% dividend, by the way, and it's a 5-star fund, as you can see on Morningstar, okay? And also Cornerstone beats the indexes, as you see on this chart. Look at the chart, okay? So no questions on, well, what about my chart on Portfolio Visualizer? It shows it's going down, Cornerstone. Okay, you have to learn how to factor in the drips. You have to factor in the dividends, the 20% dividends, and the drips, okay? The drip obviously is the most special part of Cornerstone for all you newcomers at this channel. Here's the $8 market price, and then here's the drip, okay, $6.49, 28% gain. We also got our drips in for this month, which was on the 5th, I believe, 9/5. So that was this month, and that was for a 28% gain. So all of my subscribers here at this channel and all the clients in the Discord chat room, I'm sure they all got their dividends too. And, here it is. It's a real thing. 649. 28% gain. Okay. So, every month you get this 11% there. Okay. 663, 25%, 642, 29%, 627, 32%. So, Cornerstone, you have to learn how to factor back in the drips and the dividends in order to understand how this chart looks the way it looks, okay? And again, more importantly, when you have a 50% crash in the markets, okay, I'd really only be down about 30% because 50 minus 20% dividends in Cornerstone is a 30% loss. A 30% loss, I'd still be okay because look at my available for withdrawal, okay? Take my account value, 500,000 plus the debt. Let's just make it 800,000 for easy math. 800,000, a 10% correction would be 80 grand. A 20% correction would be 160. So a 30% correction would be around 240. Okay. So I'd be in a margin call by 40 grand if we had a 50% correction. Okay. But don't forget, my options would clean up on the other end. So I'm not going to get hurt with my account being the way it is. I've been through Corona crashes. I've been through the 2022 crash. The lessons I learned from 2020 were tie all your investments to the indexes. Don't tie them to real estate or energy, which are small parts of the indexes. So, okay, that's the first reason why using margin with Yieldmax funds isn't as risky as you think. The dividends pay back the debt. Okay, they pay back the debt and they give you qualifying income to level up your account with loans or to live financially free out of your brokerage account because obviously my dividends qualify to banks for a car loan, a house loan, a personal loan, a business loan. So this is the key, and the interest here is so low, 6%, that I don't mind holding this amount of debt. And the dividends I'm getting from Yieldmax funds are superior, so superior to my interest rate that it pays me to be in margin, okay? It's like I'm hurting myself not to be in margin, okay, when you do the math like that. You just have to use small amounts of margin, okay? For every $1 you put in your account, as I showed you in previous videos, let me scroll to the top here, you get $4 of purchasing power. I'm just using a fraction of my purchasing power, okay? I'm using about half of my purchasing power, but I'm more experienced. When you start out with margin, just use 10%, use 20%, and you'll find that whatever margin debt you took out, it's going to get paid back by the Yieldmax fund dividends, even if the Yieldmax stocks fall, okay? So that's the first thing, okay? And the second thing is, obviously, I kind of already alluded to that, why it's not as risky with Yieldmax funds, because I anchor my portfolio to Cornerstone. I already mentioned that. I just showed you the drip. Keep in mind with Cornerstone, you have to ask for the special drip, and then you have to play the rights offerings properly, okay? So with Cornerstone, that's what I alert you of here in the Discord chat room, okay? The Cornerstone RO, okay? This is it. This is our announcement only page. By the way, this is where I'm going to announce it so that no messages take up the feed here. So when I announce this, it'll be a clean thread and everyone will see the message for the rights offering. And we also have my portfolio here where you can track my portfolio day to day. This is where I spend most of my time when I'm not making videos on YouTube. All right, so that's where the announcement comes. We have hundreds of members on Discord already, highly affluent, highly intelligent members who read all of my e-guides and also have a lot of personal experience in the markets. And so they can share with you their unique experiences in their brokerage account because, again, not every brokerage account is the same. Some don't offer the drip for Cornerstone. Some have different maintenance for the Yieldmax stocks that we own. So but anyway, that's where you are alerted of the Cornerstone rights offering announcement. Okay. And that's how you play Cornerstone is you play it for the rights offerings, you play it properly, and then you ask for that special drip. Okay. That's why it's a 4-star fund, 5-star actually. Okay. I already alluded to the hedges here. Now, the last point I want to make on why it's not as risky as you think is if you using Yieldmax with margin is because if you take your allocations and properly allocate your Yieldmax positions to what they are in the indexes, then you will see a dramatic outperformance, in my opinion, because you can't just equal weight everything. You can't just put 10K, 10K, 10K every Yieldmax fund. I know some people equal weight, and that's one way to do it, but you have to equal weight the entire stock market to really see some type of performance there that you're trying to get because you can equal weight with tech, but tech is 20% of the indexes. You also have financials. You have 9 other sectors that you have to keep in mind. So what I like about the top 10 holdings of the S&P is these are most of the Yieldmax funds: Apple, Microsoft, Amazon, Nvidia, Google, okay, Meta, Berkshire. We're going to have that next. Tesla, we're in that. But if we go to the next page, you'll see ExxonMobil and JPM are pretty highly weighted. JPM is 1% and Exxon's 1%. So if you just keep all of your stocks in your portfolio allocated with these same percentages, don't keep them equal weight. I don't have 10K in Exxon. I have 5K in Exxon because that's about 1% of my account. When you keep the allocations matched properly, then it's really hard to see a downturn in your portfolio in performance, okay? Because you're basically matching the S&P index. And as I told you, the S&P indexes don't fall as much as stocks. Now, yes, these Yieldmax funds fall as much as the stocks. That's the tricky part about Yieldmax, is they sell the puts and sell calls so that they track when the stock falls. They can fall just as much as the stock, but they won't make as much money going up as the stock. That can be a problem, but not if you don't time it right? I think that if you buy, let's say, a Tesla on on a certain moving average, like a key moving average, you can get best of both worlds. You can get capital gains with Tesla. I was up 15% in Tesla at one point in Tesla. You can get capital gains and dividends. Okay, so look at this chart here. Tesla looks like it's really breaking out. It was up 10% today. Wow. Okay, our Tesla was only up 3%, but that's okay. I mean, we talked about on Friday how this was a really good breakout. This is, a bull flag into the moving averages, pressing into the moving averages. All of them are close. We're on that 200-day moving average. Okay, we tag that black line, the 200-day moving average, as you can see above. So this is the 200-day moving average. So this was an easy buy for us, Tesla, and so I bought more Tesla. And I'm going to get some gains, 3% today, plus the 50% dividend. So. And when Tesla falls, as long as you keep it matched up to what it is in the indexes, then you fall as much as the indexes. And that's why it's not so risky when you use margin, okay, with Yieldmax funds. So those are the 5 reasons why, guys, okay? For one, the dividends pay back the debt and the interest. Just use small amounts and don't use stocks on margin. Use dividend stocks on margin, which is what these Yieldmax funds are. Also, you anchor with Cornerstone, okay? Anchor with Cornerstone, and that 20% dividend is set and takes away some of the unsurety of the Yieldmax dividends when they fluctuate, okay? Hedges, keep hedges in place. I keep short options on, as you know, and you can also use inverse hedges like Tesla has TSLS, Nvidia has NVDS, but I don't really mess with those anymore because I just keep position size management on. I just keep that, I just make sure the allocations are right in the Yieldmax funds. So hedges, choose allocations properly. Don't go with single stock risk again. Go with dividends or the indexes when you're using margin, and the Yieldmax funds are largely the indexes. So I think that'll do it for the video, guys, okay? If you have any questions on how I live financially free out of my brokerage account and you're interested in doing the same, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, you get my phone number to call me anytime at for free, which is an immense value in my opinion, and you get the Discord chat room. The Discord chat room is special, guys. We have hundreds of members here who, again, are very bright, and if you surround yourself by these people each day who are all staying on top of the rights offering announcement, who are all staying on top of these Yieldmax funds and have interesting ideas to exchange. If you keep them in your corner every day, it's kind of hard to lose when they say you're the product of the 5 people you surround yourself by every day. So if you surround yourself by these people in this community, I really feel like we can go far, especially if we watch that Cornerstone rights offering announcement. And also, guys, if you've been wanting to invite a spouse or a close friend or family to the Discord chat room with your link, just go ahead, email me if you want that link, or I'll post it somewhere in the Discord chat room if that's possible. So yeah, that'll do it. Email me if you have any more questions, and I'll talk to you soon, guys. Thanks.